Good morning. Thanks for checking out this short video. What we're going to talk about today is just the general investing theme for the week. And as we've seen over the past few weeks or past several weeks, the theme is still risk on into this week. We've seen several go trends in the risk assets such as equities, commodities, and cryptocurrencies. And we talked about this before, but the only thing that we can really see derailing this is dollar strength or possible dollar strength. And on the short-term daily situation, we do see a little bit of dollar strength, but remember that's against the overwhelming backdrop of a larger time frame downward trend in the dollar. So we have to see what happens there. But one of the things that investors have been talking about this week is the rising spread between the 10 and the 2-year treasuries. So we're going to take a look at that chart first. That's the first chart that we're going to look at. Now, what we're seeing here is that it's historically, and we know that it's historically good for stocks when the spread between the 10 and 2-year treasury notes is rising. And so as we look at this chart, we can see that the go trend here is very strong. We see that we're consistently making higher highs and higher lows. And if you look on the bottom panel, that's our momentum oscillator. We can see that the GoNoGo oscillator's found support at the 0 line, and we know that it should when the trend is strong, because the pullbacks or corrections should never push that oscillator into negative territory. Right now, the oscillator is in positive territory and rallying after being close to the 0 line again. So that being said, if there's a tailwind for equities based on the rising treasury spread, let's look to equities. But should we stay with domestic US equities, or should we look for opportunities around global equities? So this second chart is a heat map, and it's a heat map showing the relative trends of the major indices using the S&P as a base. So what we can see here quite clearly is that the trends are not the same across the globe. We can see the blue, the bright blue of the GoNoGo trend, the Go colors are really strong in emerging markets. And as you can see, the other extreme of that is that in Europe, we're seeing real underperformance, those purple bearish colors on those European panels showing no-go trends across most of Europe. So bands where we're seeing the bright blue colors, those are outperformance. So let's turn now to one of those charts, and we're going to look at the Nikkei 225. That's an outperforming market in Asia. So the daily chart here now, it shows the GoNoGo trend of this index. And just like we saw really with that first chart with the treasury spread, we can see that the trend is clearly in a go move, painting the blue colors of an uptrend. And again, one of the most important things looking at this chart is that the momentum oscillator on the lower panel is finding support at that 0 line. When that oscillator hits the 0 line and rallies, we consider that a low risk entry into the trend, because it's suggesting that there is renewed momentum in the direction of the trend that we're in. So in this case, recently we saw another low risk entry in the form of a green circle below price on the chart. And since then, we've seen price make another high. And right now, price is struggling a little bit to go higher, but is at those highs as we speak. So what I wanted to finish with is just to say that while we very easily focus on the domestic trends in the US, don't forget that opportunities can be found by looking at the relative trends from around the world. And so if you look at something that shows rotation and shows that relative strength, the trend of relative strength, and then go to some of those other places, we can capture that all-elusive alpha by going to these other areas where we're seeing trend.